All right, guys, sitting down to do a private review for all of my inner circle members here. Today is, what is it? It's Wednesday, October 25th, 2023. I'm going to be reviewing this candlestick right here. If you were attentive in the Discord this morning, I gave a short signal around the 8 o'clock hour. And depending on how long you held, from where I called the shorts, that was a 50 point move. So you could have gotten anything from 10 to 50 handles. So I told you guys my take profit, but you don't always have to settle for my take profit. We all have our own different trading plans and our profit objectives. I went for 11 handles, so it's just I think it was 11 handles. Let me see. Yeah, 4256 was the short, 424525. So essentially 11 handles there, more than enough. You can clearly see that was my only execution on the day. One contract. Now, let's get into the review. The question of the day: how did I know we were going to react off of this for value gap right here and then trade lower below this swing low? How did I know that? I didn't know that until I looked for, on the hourly 15 5-minute time frame, you look for that underlying market structure. Once we hit this daily fair value gap, then you go to the lower time frames, you look for the underlying market structure, you look for manipulation, you look for the premium discount raise relative to time of day. Just basically, just after we hit the daily key level, we're just looking for context and looking for all of the signatures that you look for in your personal trading model to then get a narrative to short off of this daily fair value gap. Okay, so I just said a whole mouthful, but it was very powerful, and I'm gonna get into everything on the lower time frames. Don't worry, nothing's being hidden or held back here. So, along with this daily fair value gap, and once again, I'm gonna say it. I say it in every video, but my pre-market analysis this past Sunday, everything that I'm saying right now, I said in that pre-market analysis. So I'm not just coming back telling you what's already happened, looking like a genius like other gurus do. Everything is always going to be said to you guys beforehand. And that's not to say I'm going to be right every single time, because I'm not. That's why we adapt, and you don't marry a bias, because if you do that, you're probably not going to be profitable. Anyways, I brought your attention in the pre-market analysis to this midpoint of the wick. See the midpoint? You see we closed a little bit above it, but that's fine. We don't always need exact pinpoint precision. The fact that it closed just a little bit above it, that's completely fine. What matters is we worked up into the upper quadrant, right, within this daily fair value gap, and then we traded off and closed relatively close to the midpoint. That's enough for me to look at this as a significant daily level to monitor. So the other discount array or premium array, sorry, I brought to your attention here was the midpoint of this breaker. Measure that out. So we have the low, high, low. Use this breaker right here. Take the midpoint, or you can just say inverse order block, same thing. But anyways, once again, we didn't get to the midpoint. We just a little bit away from it, and then we wicked off. What's important is that we worked up into the body of this breaker and accumulated shorts off of that to send it lower. So it doesn't have to get exactly to the midpoint. It's just important that it gravitates towards that level. So 3 daily levels I was looking at for today. That's everything I used up on the daily time frame here. So let's now go to the hourly. Tuesday, Tuesday we came up, swept the buy side liquidity from Monday's high here and Tuesday's high. Boom. Well, not Tuesday's high, because this was Tuesday, just post Tuesday. Technically this is Wednesday, but it's still Tuesday. Anyways, came up, swept these engineered relatively equal highs. Where at? Where did we do that? Take our daily dealing range from high to low. And what did I say? Once again, you guys got to pay attention. You're wasting your time here if you're not paying attention to all of my private mentorship videos, my signals, and my live streams. The only reason why I'm doing all this, every single one of you, I want to see every single one of you fucking crush it in these markets. That is the only reason why I'm doing this. And the only reason why I'm even charging for a service like this is because if someone's willing to pay me $15 per month, that shows me they're serious about trading and serious about wanting to learn. I don't want anyone that's half-assing shit in my inner circle. Okay? I don't even know why I just went down that trail, but the point is, I want to see every one of you fucking crush it, become beasts, and not even need me eventually. That's exactly what I want to see from every single one of you. And you can do that. You can literally you don't even have to watch any other video ever again, or watch any other tweets, none of that. If you're in my inner circle, you can easily carve out a nice side income on your own just by watching everything I'm doing here in the inner circle. Anyways, that's enough talk. Once again, I don't even know how I just went down that trail, but anyways, what did I say in my pre-market analysis video? Or not pre-market analysis, my last private mentorship video. I said, around equilibrium, we anticipate what? Stop raids. Where did the stop raid take place? Right at equilibrium. These relative equal highs here, engineered just below equilibrium, hovering below equilibrium, and then what? Right after we closed Tuesday, we got that massive random rally that everyone was so shocked about. I wasn't shocked about it. Not that I was trading it, but we trade just a couple ticks above equilibrium there and swept the buy side. And then we instantly wicked off of this daily fair value gap. So that to me was important. I wanted to see this high stay intact as an intermittent term high, which it did. We have this swing high right here. And then the swing high formed here, wicking off of that daily key level. And then we had this small swing high right here going into 8 o'clock today. So that was an intermittent term high formed. NASDAQ, you can see that we actually swept the Friday highs here, which is what I wanted to see on at least one of the averages. We swept that. So that would be an SMT divergence between ES and NASDAQ. So another confluence for price going lower. What did I say? Underlying market structure off of key daily levels is what we look for. Take your fib on NQ, and you can clearly see right around equilibrium is where the stop rate also took place, up into a premium. Premium what? Premium daily fair value gap and premium old new week opening gap here. And that's what these two lines here are for. So back here. And then obviously we swept the buy side and then traded into this small sell side imbalance here, or buy side imbalance, sell side inefficiency right here. Extend that out, boom. And then same thing, we created an intermittent term high off of that daily key level. Now that I just laid all that out, with all of that context, all of that, we can reasonably expect this sell side liquidity, all of these clean lows here that were engineered Monday and Tuesday. That was what I was looking for us to draw into. If you guys were watching the Discord, that's what I was calling out. And then obviously, eventually, this previous 3-day low right here, that was the main draw on liquidity for today. I wasn't holding for that. I just simply I hit my targets for the day. That's all I need to say. I don't need to hold for this low to be profitable, even though you come back in hindsight, you're like, damn, I could have had 50 points. But anyways, after all the context I just laid out for you, let's go ahead and get into today's action, okay? I don't want this to drag out. I want to make it as quick as possible. So, take that midnight opening price right here. Boom, extend that out. And I apologize if you guys hear anyone in the background. I do have some family members over tonight. So, we trade down off of the opening. We trade up, return above the opening, clearing out the buy side liquidity from 1 a.m. right here. This swing high right here. It's more prominent on the lower time frames. We'll get there. But important part is we returned above the midnight opening. And we respected what? This sell side imbalance, buy side inefficiency above opening price and above the buy stops right here. And what else do we have? We have this inverse fair value gap along with the one I just outlined. So I'm just gonna outline it with these black lines here. And I'll make them bold just so it stands out from the rest of the lines. So we see that. What do? We return up into those 2 or 3 premium arrays. Sorry, the buy stops, that's a premium array. And what else? I'll let you look for a second. We had this breaker right here. We had the high, low, higher high. And then this down close candle would be the 1 hour breaker. Take the midpoint of that. You see, we close once again. We closed a little bit above it. Doesn't matter though, because we're returning above opening price. Important part is we worked up into the body of this breaker, and then we wicked off on the hourly time frame. That's what's important. Let's go ahead and flip down to the 15-minute time frame now. And once again, I'm just gonna mark this out as sell side liquidity before we go lower here. All right, just for the sake of not having too many lines, you guys saw the inverse gap that I brought your attention to, so I don't need to have these lines here. I can't stand having too many lines. Anyways, remember the buy stops I told you about? This high, and these highs, and this high. Came up, got close to this high, and then traded off a little bit, and then boom. With speed, traded right above all the buy stops here. And then we accumulated the buy stops above what? The midnight opening price. We accumulated all those stops up here, and we accumulated that to then start the sell program. Now, what did we create whenever we took the buy stops? We created this 15-minute order block right here. So whenever I took my trade, I was keying it off of this order block here. So we now have a 15-minute change in the state of delivery, right? So we have this 15-minute change in the state of delivery. Let me change the color on it quick. Boom. Trade right up to that, to the tick, the opening, to the tick. Boom. Trade up into that. Go find an entry short on the lower time frames. Sell side liquidity, these relatively equal lows stacked up from what? The London session. So this would be London session sell side liquidity. And then relative to these lows, we also have this low. So now we have 3 equal lows here. So high probability draw on liquidity. And then also this Monday lower here, obviously. Let's go ahead and pop down to 5-minute time frame. And just for the sake of it looking better, I'm just going to go into replay mode. I hate replay mode, but it looks better whenever I remove some of the price here. So 15-minute order block that turns into this series of up close candles on the 5-minute time frame, right? What else do we have? We have this breaker right here. All right, actually I can't do replay mode. Oh, sorry guys. I hate replay mode. All right, anyways, boom. We have this breaker right here. See this small little down close candle. We have the high, low, higher high. So coupled with the order block, we have this breaker. So you wouldn't want to see it trade above that. Now, where did I go short? Right at this 5-minute imbalance within the 15-minute order block after this market structure shift below this swing low right here. So take this imbalance. Let me change the color on it. We have that. And how did I have confidence that we were going to trade up into the lower end and trade off? How did I have confidence? Because we have this low, high, completely overlap this swing. So this technically should act as a balanced price range, and it wouldn't really need to work up higher. It could, but if it really wants to go lower like it did, it would respect the low end of it. And then also, we have this inverse. Fair value gap right here. And I'm not going to keep these lines on here because we didn't even trade up to it. So that to me was good. That was showing weakness off of the balanced price swings right here. So in the Discord I mentioned, If you didn't catch the 5-minute imbalance entry, boom, as soon as it trades up to this 5-minute order block, go short right there. That's the second offering it gave. It gave one offer here for short, and then it offered, tipped its hand for you to go short again right here. Those were the only two, in my opinion, these are the only two valid entries pre-market today. So as soon as we trade up to this imbalance here, why would we trust this order block? As soon as we trade up to this imbalance here and create this swing high, we classify that as an intermittent term high. We don't want intermittent term highs traded above if we're entering a sell program. I'm dropping fucking nuggets all throughout this video. Are you paying attention? Because there's a whole lot of gurus selling a lot of money for this. Or charging a lot of money for this, I guess is the word. Anyway, what else? Institutional order flow. You want to see institutional order flow? Respect all the up close candles created. We have up close candle right here. Was this respected before trading lower? Yes, it was. These up close candles here, were they respected? Well, they weren't even trading back to. So yes. What else were we trading up into? I know it's a whole lot of shit I'm bringing out here. Bringing out the big boys. We're trading up into the new week opening gap high and then traded off. So this week's new week opening gap back here. So boom, right away. Let's go down to the 1 minute time frame. What time of day did I go short? Pre-market, yes, but more specifically, 8:50 to 9:10. And what is that? That is the pre-market macro. Oh, I almost always type macro instead of macro, but it is a macro, not a macro. So my short was right within that macro. The macro, it didn't go down at the macro. The macro started the move and was offering us the sells within the macro. And then what? Right after the macro ends, what happens? Boom, off to the races. We go down to the sell side liquidity pool mentioned ahead of time in the Discord, and that's exactly where I got covered right there. So short here, got covered here, boom. And this was everything I used for my trade today. I guess not so simple of a lecture today, but maybe just watch it a few times and you'll get it. I think that's going to be it for today. This already dragged out pretty, I don't want to say long, but there was some decent opportunities to get short, but nothing that you should come back on and be like, oh, damn, I missed that. Shit. Because, I mean, it wasn't really a high probability opening range, but we did have the nice continuation here at the lunch macro. So hope you guys found insights on this. If you did, just please hit the like button. I don't gain anything from that happening. It just simply gives me feedback. And if I'm not getting a whole lot of likes, that means I gotta up the quality of my videos here, right? So I hope you guys have a good night. I'll see you all tomorrow on a live stream, and be safe.